The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 16th. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now is just fine. 877-927-6648. Internationally, 727-445-1044. Of course, you can send me an email, steve@tfnn.com. Just make sure you put something big and bold in that heading column. And, of course, inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. We got to see a red out there, folks. The Dow is off 5 points. The S&P is down 2. The NDX 100, a different story, up 0.25% or nearly 14 points. Russell 2000 off a couple points. The semis are up 9. They are on fire, have been on fire. New York Stock Exchange up 7, so they're flat. The VIX index is down 8 pennies, no big deal, trading out at 10.34. Gold is up $6, 12.36. Interesting messages from gold and silver and the yen. So we'll see how all of that resolves itself. Gold's up $6, silver's up 12 pennies. Light sweet crude off 11 cents. There are some movers to the upside. Priceline is up 17. Cena Corp, that's a breakout, 19% move, 8 million shares. That's up $16. Weibo, something like that. WEIBO Corp, that's up $15 or 24%. Amazon up 10. That's a little over 1%. Netty's up 8. Intuitive Surgical up 7. Baidu is up 3% or $5.70. To the downside, you've got AutoZone down $7 and change. That's over 1%. Dick's Sporting Goods getting careened for a second day in a row, off 14%, 15 million shares to the downside. Children's Place, PLCE is a ticker symbol, off $5. WellCare Health off 430. Vert USA. VRTU down 430. Humana's off $4. So we've got plenty to look at. Of course, I want to look at what you want to look at out there. And I suppose, where do we start? Let's go start with the markets. Let's start with the indices out here. Let's take a look at the messages of the markets. We'll do that in a couple different fashions. First fashion is just take a look at the weekly charts out here for the ES Mini, upper left. NQ, upper right. Dow futures, YM, lower left. Russell 2000 futures, lower right. Here's what we know when we take a look at the ES Mini for the S&P 500, and then we'll go ahead and make this a full screen. What you and I are watching kind of like a hawk, so we know that these snipers are sitting right at a price point of $23.97 and a quarter. We're trading at $23.98, and it keeps going up by a tick, down by a tick. So we know that this is a very strong area of resistance. Any close on a weekly basis above 2397.25, and you have to give the edge to the bulls. It is simple as that. Support a long way down. Well, a long way down based on these markets is about 23.36 is the level. That is looking at weekly information out here. So is the ES Mini going to break above? I don't know. It's only Tuesday, but it's doing everything that it can to suggest that it wants to do just that. Of course, we would take a look at Stevie's red line out here because that's now the daily chart, and that's kind of the make it or break it level. Right now, you can see that price is trading above Stevie's red line out here. I don't have that exact number, I can get it for you. I'll go ahead and get it for you since you asked out there, or you'd want to ask. 2397.38. Well, that's an impossibility. We'll just call it 2397. Let's just call it 2397. Make it easy. Any close above that, and you give the edge to the bulls. That would say price wants to move higher. Whether you like it or not, that's what price would be communicating to you and I. And that's what we will pay attention to. Now, in the case of the yen-Q, basically, there is no resistance out here. There are just price projections as to where this thing might go. Well, where would that price projection be inside the yen-Q? For that, we've got to go over and take a look at the continuous contract as we stitch this together. We probably have to go to the monthly charts out here to come up with any kind of sane, rational thinking. And that only sane and rational thinking would say we need to look at the expansion, and I do mean expansion, of the what was at one time the all-time swing point high from back in 2000. Yeah, that's how far we're going, all the way back down to the low in 2002. And that would suggest to you and I that the next price projection level area, 59.95.53. We're at 57.21. By my math, that says that's another 274 points to the upside out there. One thing is for sure, we don't see a bearish reversal candle basically anywhere in sight. Whether we take a look at the daily, the 5-hour, the 2-hour, the 30-minute chart out here. So everything looks good. Is the market going to croak and move to the downside with the NASDAQ or the yen-Q moving to the heights that it's moving to? Well, here's my opinion on that. I don't think so. I'm pretty sure that is your opinion as well. If you think these markets are headed south without the engine in the marketplace, I don't think so. So there's really no resistance at all. We can all we have is basically Fibonacci expansion, and it doesn't need to be the 1.272. It can go ahead and rocket itself to even higher levels. Now, in the case of the Dow, it's trying to make its way up into the 21,106 level. There's not anything that we are seeing on our charts to suggest that that is what it is not doing. Well, Steve-O, how the Sam heck can you say that? Well, if we just simply take a look at the Dow equity futures contract, you'll see it too has a red line. Right now, price is trading above that. That level being 20,938. Now, it's only trading above it by 4 points, so that's just not even a breath of oxygen where price can close below that. But watch, 20,938. Look, if price closes above that, excuse me, didn't mean to grab that ice cube while I took a sip of water. It just confirms the hammer candle inside of the Dow equity futures contracts from this is a daily chart from 4 days ago, where it was really trying to hammer out a bottom. That is its message out here. So price looks like it's on its way to the top of its weekly profile. I expect it'll take the rest of the week to get up there, but it will go ahead and get that work done until it suggests otherwise. And right now, daily and weekly, that's not the suggestion. Not at all. Russell 2000, what Russell 2000 wants to do out here, wants to get up and test the price level, the top of its weekly box, 1414. You're trading right now at 1389.80. And them there are your equity futures contracts. Looks kind of bullish to me. We'll go see. We'll go check out some other charts. We'll go figure out what these markets are communicating to you and I. Steve Rhodes with TFNN.
A Rubik's Cube offers more than 100 million starting positions, resulting in 43 billion potential twists and turns. Yet, this puzzle can be solved in 20 moves. Knowing the right move makes all the difference in the world. And on Wednesday, May 17th at 5:30 p.m., I'll share with you the 5 essential patterns for timing the market so that you can make the right moves and become a better trader and investor. A few weeks back, I showed you how to spot a bear market with 2 moves that the market always makes. And on Wednesday, I'll unlock the 5 best moves for timing any market for any time frame. To gain access to this extraordinary one-hour workshop, test drive my newsletter service, Mastering Probability, for the next 30 days for free. Just visit the homepage at TFNN.com and click on the link, 5 Essential Patterns for Timing the Market. And you'll be able to attend live as well as review this workshop anytime during the next 30 days. I'm looking forward to helping you solve the puzzle of the markets, and I'll see you on Wednesday, May 17th. TFNN.com. We've got your back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Still relatively flat market out here. If we take a look at the NASDAQ Composite, whereas yesterday it was showing one of the patterns that I'll be teaching folks tomorrow evening from 5:30 to 6:30, and these are great patterns. These are great patterns for identifying market tops from and bottoms on any time frame that you trade. You just need to know the technique behind it, and that's what I'll be sharing with folks tomorrow evening. And just because a pattern is present, you know that I share this with each of you all the time. There are several different patterns that you and I follow because they work so consistently. But the key to any pattern, the absolute key to any pattern, is the sign from the bulls and the bears. They show up for work each morning. They have but one role, and that is to provide us with a candlestick signal. That is why Japanese candlesticks are so important. Japanese candlesticks on their own are nothing more than kind of an interesting short story or book to read out here. But when you combine them with the other pattern tools out there, that is the real power. Well, in this case here, it is no different. And what we saw occur over the last couple of weeks out here, more like 1, 2, 3, 4, 5, 6 days, was we saw a price beginning to rise with less relative energy. But again, that is just nothing more than, like in Florida here, a weather forecaster forecasting rain. I didn't need him or her to tell me that it might rain in Florida. The key is, how long is that rainstorm going to last? Is it going to be a bad storm? That's why I want to know if there's going to be hail. You know, balls of fury falling from the skies out here. And in this case, those balls of fury are or falling from the sky, unless there's just a complete croak in the NASDAQ Composite today, it's gone. So in this case here, the weather forecaster, Stevie-san, would say to you, guess what? Nothing but blue, sunny skies out there. You can see that what we have seen and witnessed over the past 4 days has been nothing more than a test of Stevie's support and or resistance line out here, that being the red line, priced at 61.45.52 at a minimum, and you're trading at 61.62 right now. Not that big of a deal. 16 points or so is the spread out there, but you need to see a close below Stevie's red line just even to possibly get our skirt into a tizzy. But without that happening, the pattern that identifies at least a decent type of tops out there, it's gone. It's not there. It's terrific Tuesday. When tomorrow's going to be wonderful Wednesday. Then there's going to be terrific Thursday. And then it could be freaky Friday. We'll see. We'll take things one day at a time. But inside the NASDAQ composite, it's saying, hey, no problem. Now, there are conflicting messages. Which one will I go with? It's this one that has the highest priority. It's not the one that I'm about to show you right now. That one being, hey, where is its advanced decline oscillator reading? What you're going to see is just below zero. Now, it's a slight problem out here, but this too can be resolved. This one says sellers are in control. They're doing a stinko job. Hey, you ought to fire them if what you're trying to do is short the market, because they're basically losing every single battle that is out here. Now, as long as we are taking a look at this chart, we can see that those advanced decline, the daily information out here, they're all below zero, all being the Dow, being the NASDAQ composite, being the New York Stock Exchange. Does that give me reasons to worry? It's a signal. Well, we look for our patterns. Those aren't patterns necessarily. They're important tools to help us understand when we have divergence or not. When you don't have divergence, boy, you don't get clearer messages. You may want to ignore those messages, but in this case here, what we have is a bit of divergence. So we'll just simply go with the tools that help us to identify tops and bottoms. And that's not what this is about, at least not at these levels. In the New York Stock Exchange, you get to plus 150 or minus 150. Well, then it's a whole different story out here. But right now, you have to take a look at the volatility index, bottom right-hand corner of my screen, just hanging out around that Bollinger Band. It's going to hang out here for a long – you better get used to a low volatility index. Yeah, get used to it. Now, that doesn't mean that sometime during the course of the next week or two that we don't see some spikes out here. But this is here to stay, which is why you really want to identify the patterns that are involved with the volatility index. You want to lose big L on the top of your forehead, the thought process that a low VIX index means that everything is complacent. You tell me how in the heck you trade that from a profitable standpoint. You just don't. And just because it's low, please don't interpret that to mean I'm going to go out and buy the UVXY. You just don't do that. Don't make that mistake unless you are just a master of this tool, because otherwise you'll get trapped like rats out here. Look at all of these inverse. Look at all of those folks who tried that before. Look at all of these folks. Yeah, the inverse splits that this thing has done, the reverse splits that this thing has done, says at one point in time it really should have sold one share. Yeah, this is better than Berkshire Hathaway. This says it should have sold at the high. I got to get my zeros right here. $12,240,000 per share. Yeah. It sounds like the good short out there. So don't do it. This is nasty stuff out here. You'll lose a fortune faster than you can say, I don't know what it is you can say. Say, just don't do it. That would be the better thing to say when trading the UVXY. Now, that's not to say when you catch this thing in a trend to the upside that you can't make some shekels fairly quickly out here. But for the most part, you can find something better to trade than this nasty note. Of course, actually, this is an ETF, the UVXY, so it's better than some of those exchange-traded notes, but it's not much better, as you just saw out there. So with regard to – now, there are some interesting signals. There's one interesting signal inside the volatility index. If you're a bear out here, and this is going to be hard for you to stomach, but if you are a bear out here, let me tell you what it is that you do want today. Let me tell you what it is that you do want tomorrow. Let me tell you what it is that you do want the next day. You want to see the S&P 500 close at higher highs. That's correct. That's what you want to see. If you are a bear and you see the S&P 500 close a little bit lower today, that is not what you are looking for. I know that is hard for you to believe, but it is true. It is true if you want to master the signals that come from the volatility index. If you're fine and happy with low volatility means that things are complacent, well, then so be it out there. But instead, what you want to look for are those patterns that help you to spot tops and or bottoms inside the market. Well, one of those topping signals is when you have a rising bottoms VIX index, spot VIX index on a closing basis. It has worked in the past. It'll work in the future. Do we have that as we speak right now? The answer is no, not really. You want to see a higher close day. It's really close. But what would go a long way for those of you that are bears out there, you want to see the S&P 500 close higher. Now, I'll bet when you woke up this morning and you were licking your chops and you were lighting those fires and you were saying crash, baby, crash out there, you weren't saying, hey, please close higher today. See, that's what you want. You want that type of divergence if you're taking a look at that volatility index. You want to see on a closing basis a rising bottoms. And what you want to see in the S&P 500 is a rising tops out there. Otherwise, it's just your ordinary type of perfection. Well, if you're a bear, start counting your blessings. Start praying for higher closes in the S&P 500. And yes, that means remove those shorts. Put on some long pants. See Coach TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up $1. S&P is down 2. Let's go out to Philly and speak with John. John, thanks for calling. Thanks for holding. How are you doing today?
Steve, I'm very good.
Glad to hear that.
Glad you're doing the show. We appreciate it, and I wanted to call in and ask you if you could examine further on our behalf the NASDAQ 100 daily chart for us.
Okay.
And, Steve, what I wanted to ask you to do, just as an exercise to see a concept visually, is to pull back the NDX daily chart going back to the low starting January, February 2016, the end of the last decent correction. And if you could do that, and on TigerTV, draw trend lines off of lows so we can visualize how the rate of ascent of this NDX rally is getting steeper and steeper. Be very helpful if you could do that for your Tiger TV listeners. And just to assist, I have drawn that chart myself and posted that in the Tiger's Den for your audience therein to see that as well.
So let's go look at your chart. You've done some of this work here. I can go ahead and post this chart on my screen right now. And so people can see these different trend lines that John has drawn going back into, looks like February 2016. And you can see the so go ahead, since you've done some of the work. You're a great co-host. Why don't you share with us some of your observations?
Well, Steve, the observation I'm making that I'm sharing is just to restate real simply the pace of the advance in the NDX 100 since February 2016 is accelerating, is increasing. And
absolutely.
You've done a fabulous job at showing us the very big picture using the monthly, quarterly chart way back to the start of this bull leg at that 2009 bottom. And we can see it is amongst the biggest bull markets ever in United States stock history. In fact, it might be the biggest by now. I'm not quite sure about that, but if it's not the biggest, it's amongst the biggest. And a phenomenon that I wish to share with you, and Steve, of course, you and I have talked about this, but it's worth stating more openly now, is that bull markets that are truly massive oftentimes do not complete until they go exponential. And I will tell you, I hearken to the teachings of a guy that I've known for 30 years, and that fellow is Marty Armstrong, who coined the phrase phase transition, kind of like a pot of liquid water boiling to steam, the phase transition between liquid to steam. And one can look at major league bull markets, the 20s Dow Jones bull market, the 80s bull market in the Nikkei, the 2002 to 2011 bull market in silver.
So I've got that up on the screen. So I've got that up on our screen, which is the 2000, because we have so many people that do trade silver, and most people in our audience probably can remember that when silver ran up into the 49 level out there. And so I've got that on my screen. So as you talk, maybe kind of correlate that to what it is you're taking a look at today. Or some thoughts.
As Steve, on Tiger TV, you're showing the monthly chart on silver, which just shows the massive bull market from 2002-03 that culminated with a bull market top in 2011. And that was an example of a phase transition bull market or phase transition rally at the end of the bull phase to complete the bull market.
Yes.
And I'm suspecting what the NASDAQ 100, with Apple, Amazon, Google, Facebook leading the charge in the dramatic transformation of the U.S. economy, is a candidate for a phased transition rally phase now underway that won't culminate until it literally goes vertical. And phase transition events are typified by the final phase doubling, truly doubling within a year's time or less to complete the last phase. And when the NDX 100, of course, we're at 5,700 now. It went up into 2015 to 4,800. That was the double top versus 2,000.
Sure.
Now we've gone above, and it appears the pace of this advance is just accelerating. And the reason I bring this up now is not to make a forecast, but to say, we can't ignore the potential that we have a runaway phase transition event occurring right now in the NDX 100. And phase transition or exponentially increasing bulls are typified by trend lines off lows that just get steeper and steeper and steeper. So I just wanted to point that out and ask you to draw those lines I posted on the Tiger's Den just to illustrate a phenomenon. So
yeah, and so if we take that, and so first, I want to thank you very much, one for having shared that with me, but then secondly, having shared that with everyone else out there, because I think it's really important for people. As John said, he's not making a forecast of it, but his mind is open to that as a possibility, and that's where really things start. If you open, and in John's case, he's able to go back. He's given you a few markets where this has occurred before. When we take a look at some of the patterns that are ongoing right now, and the ascent at which we've seen the NDX move up, and then folks, so here what he was saying, and I just want to illustrate it for each of you visually. So here what John was sharing with you is a doubling of price, and what John was referring to specifically in the NDX 100 is going back to the high that it formed back in 2000, March of 2000. And if we just simply take that distance, which we'll call just 4,800 points, if you went to zero, it really didn't go to zero. But if I just go back, in essence, into the lows of 2002, and I double that, that gets us into the 8,800 level. Now we're at 5,700. All that John is sharing with you, certainly that I'm also sharing with you, is open your eyes up to the possibility. And if this were a phase transition, what a beautiful thing to be able to make money and to be able to open yourself up to the possibilities here that the NDX 100 runs to the 8,800 level. I mean, John, just sharing that thought and that possibility is so useful and so helpful, in my opinion, and I can't thank you enough.
Steve, thanks for all you do, and look forward to seeing those pictures in the den. Thank you.
You betcha. Take care. Steve Rhodes with TFNN. We'll be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, my friends. So now that we've opened the kimono here, it's worth continuing diving into it, just simply to open your mind to the possibilities of what is to unfold. Because what we haven't actually done is given you, what John had shared with you is a technical phenomena that has occurred and something that you should consider, especially when we take a look at really the results of the NDX 100. Now, what I'll do here on my screen, let me see, I'll just go back. Here's the monthly chart for the NDX 100. And what we know is that price hovered around the 47.89 area for quite a period of time. That happens to be a horizontal trading range. And then once the NDX 100 made its mind that it was going to break above resistance, you and I, we identify resistance and support levels. In this case here, it wasn't the 5,000 even Steven number. It was 47.89 out there. And once price closed above it, which was back in September 2016, suggested to you and I that price wanted to go to the next level. These next levels are these horizontal trading range areas. So 56.15 is one of those levels this month. And you can see that we have really made a beeline for that area. And this month, we have cleared it. Oftentimes, price will pull back. So I know that John is open to a pullback retracement. 56.15 or 57.18 should be support if this phase transition is, in fact, in process. Here, there's other elements to take a look at. But we don't even have to see a pullback. The NDX 100 can run to 64.41. Now, this not, oh, by the way, I'll just throw this. Now, John may already know this. I don't know if he does or he doesn't, but I will share this with him, and I'll share this with you. There are certain patterns that you and I take a look at. And some of those patterns are, one of the patterns that we take a look at, we take a look at Tom DeMark counts out here. Now, John, I don't know, I imagine you did, but I don't know for sure if you knew this, but when the actual high in silver formed out here back on April 25th, 2011, the most recent high out here, it was a Tom DeMark 9 count, one of his setups out there. And if you go ahead and use Stevie's red line, this is a daily chart that we have up on our screen. There's a number of different ways that you can use the red line. That's something that we'll be reviewing tomorrow evening at the workshop. You can see how price never closed below that level. Well, the last time that it closed below that level was for one day back on March 29, 2011. Again, you look for follow through. There was none to the downside. Price just continued to move higher. That was not the case once the top formed, because about 5 days later, back on May 2nd, 2011. That's when price started to crater. There was follow through to the downside, and then you saw one heck of a nice retracement. So we will be able to identify when the next top would form, even in a phase transition process. It'll rear its head on a daily, on an intraday, on a monthly chart, and so forth. But now back to this chart. Actually, we don't need to go to the chart because I've given you the level. Just take into consideration the following things. What is it that's going to fuel this? Well, we already know that there's the repatriation that's out there, so $2.6 trillion. Remember, in 2004, well, maybe you don't remember, but in 2004, and here if I were to just simply, and this is in the NDX 100, but from 2004 to 2006, during a period of time where there was only $500 million that came back, and even though the Fed was raising interest rates back then, we saw a nice move inside of the NDX 100. In fact, it moved from 1486 to 2300 out there. So that's a total of, I don't know how many points is that. You figured out. 900 points divided by 1400. What is that as a percentage? It's a good percentage move out there inside of the NDX 100. That's what it did during that process. We're talking about the equivalent of all of the QEs combined as a potential cash flow coming back into the U.S. in one way, shape, or form. I don't care if it's stock. I don't care what it's disguised as. What we know is what it will be used for, and that's the important thing. Let's not get too caught up in words out here, like the media likes to do, get too caught up in words or sentence structure and all that kind of nonsense out here. But don't get me started on that. I don't want to go off tangent there. What I want you to understand is there is fuel out here. That doesn't even take into consideration just the absolute tax cuts for small businesses. If, in fact, they go ahead and they institute the sub-S tax cut rule where you're going to go from, maybe 35% down to 15% or whatever the actual number is, folks, that is fuel. That's just like throwing, I don't know, liquid nitrogen, if you can actually throw liquid nitrogen onto the fire out there. I mean, you're talking Elon Musk rocket ship. I said ship type of stuff out there. So if you don't think that there is enough fuel to go ahead and complete this phase transition, well then, for goodness sakes, what is it that you need out there? And we haven't even talked about what happens. Now, if you believe that interest rates are rising, I'm not talking about they've got to rise in big chunks, but rising over time. How about across the world where we go from non-negative interest rates to positive interest rates, and the U.S. continues to raise its rates out there? And if people go and they decide to get out of bonds, where do you think they're going to go ahead and park that money? Now, I'm not the one that believes in this inverse relationship between stocks and bonds out here, because I can prove to you it's BS. What I can prove to you, though, is that stocks move in an inverse relationship to interest rates. So let's just stay focused on the point. If interest rates are going up and bonds are going down, how much of your portfolio do you want in bonds? Do you want it to be 60% or 50% or 40%? Or how about any percent out there? And the any percent out there might just simply be in short-term treasuries for one reason or another. So if that's what people are thinking, where do you think that? So I don't want anybody out there to say something. I am supportive of First John's thinking, because it's actually just reality with regard to what it is that you and I should be seeing inside this marketplace. And everybody out there, they get so caught up into the nonsense crap. I can say crap on Tiger TV, can I not? Well, I just did it twice, right? It stands for some acronym out there I'm sure that we can come up with. But everybody who wants to get caught up into the nonsense of whether this guy released these secrets or that, all of that is just great places for everybody to have uncertainty as to what the market is going to do. What I want you to have is certainty. Of course, you only have certainty by using stops, right? We simply lay out a premise, and then you just simply want to have stocks. Now, stops. Now, the cool thing is that there are a group of stocks. This is what I've been working on for my subscribers. I won't have it released tomorrow, I don't think. But I've been working on the group of stocks that will benefit the most from all of these tax benefits in order to be able to create our own basket, our own ETF. That way, so that we absolutely try to not put our entire portfolio, but a significant chunk of the portfolio into that. into that group of stocks that should benefit them. And we'll manage each of those individual stocks, most certainly. But what we'd like to do is outperform the index. Now, you don't have to outperform the index. If the index 100 is going to run from $57.18 up to $8,800, there's not a whole lot of management structure that you need to have. But imagine if, in fact, you could do that. And that's, in fact, what we can. Now, if all this doesn't come to fruition, it doesn't matter. What you and I know, what's sitting on your members page, is we know how to spot a bear market. We know how to spot when a correction of 10% or more is going to take place. There is a set of tools. We can either be deer in the headlights, or we can just simply go ahead and use the probability of responding and reacting when we get the signals out here, folks. So, John, thanks for calling. Thanks for sharing. Now you've left everybody with something to think about. Steve Rhodes from TFNN. We'll be back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back folks, so let's take in this next 3-4 minutes here. Let's go ahead and close out and take a look at what's going on currency-wise, what's going on gold, silver, maybe the 30-year Treasury, and they get a peek on things. So if we take a look at the Japanese yen out here, this is the daily. It will be the daily chart in a moment out here. Here is the daily chart for it. Now, what we've seen today is, we've seen this go ahead and pull back. It's not certain whether it wants to move higher or lower. It really isn't. It's actually got me a little bit confused out here. What we know about the yen is that it broke a downtrend line, right, from its tops out here. We can see that. It made a nice retracement. If we take a look at retracements from high to low out here, I believe that was an expansion. We want to look at retracements. So let's do that. So from a high to a low, it made a 0.618 retracement. That didn't hit it exactly. It was close enough. When you get up to a retracement level, it's very common for price to stall, maybe even pull back a bit. And that's what it's done. What it hasn't signaled to you or I is that's all it's doing. Is this an A to B equals CD to the downside, to the upside? It has not signaled that. Now, if we go ahead and we put some market profiles on there just to help us identify other levels of support or resistance, the dailies don't help us at all. The weeklies do. And so the weeklies say to you and I right now, in this case here, if price is able to stay above 112.55, which is nothing more than a test of the descending trend line in the top of the weekly box, and it holds a support and wants to move higher, that's just basically flat out nasty for gold, for treasuries, so forth, just because of that correlation out here. When we take a look at the 30-year, right now, here's the daily chart for it. Yesterday, we talked about how the 30-year wanted to get up and test Stevie's red line, where it was coming down close to the zero level of its price oscillator. Well, voila. Today is what? Today is a test of Stevie's red line. It's priced at 151.87 as we speak right now. If price closes above that, the message here is that bonds want to continue to move higher, maybe higher in a big way. There's nothing more bullish than a rising price oscillator above zero, bottom panel. That's what the message would be. It's not a guarantee. I wish it were a guarantee. But here's what it's a guarantee of. It works much more than it doesn't work. And that's why we pay attention to Stevie's red line out here. We don't have that confirmation. If this is going to work, though, if that's the message, then what we will see is in fact, the Japanese yen move lower, not go ahead and move higher out here. If it moves higher, then this was nothing more than a test and rejection, which we might see for a couple of days. And in fact, bonds are on their way down. I don't know which way. I'm waiting for the full test on both of these in order to make a decision. The same is the case with Goldilocks out here. Although it looks pretty good today, and maybe it has formed a bottom, and long term, I think that it has. But I just want some absolute proof of it. And if we take a look at where gold has traded into today, as it did yesterday, as soon as this chart here populates, you're going to see, bam, smack dab right into Stevie's red line. Now, I mean, we're trading on that sucker right now, 1237.40. So that, in essence, is a beautiful thing. If you close above it, its price oscillator is below zero. It's not as good as, believe it or not, the Treasury chart, the 30-year Treasury that we took a look at. But in the case of gold, what we can do is we can also go take a look at market profiles and just make an assessment here. Now, the reason to look at this is because this is important for those mining equities. And right now, with regard to gold, you need to see it close above 1237.80. That would go a long way to say 1257 is next, and then 1297. So, folks, that's the show. Stay tuned. Your favorite polar bear and mine, David White's up next. Get over to the homepage of TFNN.com. Sign up for my newsletter service, Mastering Probability, not just because it's a great newsletter, but because tomorrow night you'll get extraordinary education. You'll get it for the next 30 days while it's sitting on your members page. Have a great Tuesday. We'll see you on Wonderful Wednesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.